Are you wondering how to make smart investment decisions during these uncertain times? Look no further than Professor Jeremy Siegel's latest video, where he shares his insights on the current market conditions and how they may affect your investments. Professor Jeremy Siegel is a finance professor at the Wharton School of the University of Pennsylvania. He is a renowned expert in the field of finance and investments and has authored several books, including Stocks for the Long Run, which is the focus of the video. Professor Siegel is known for his research on stock market returns and his insights on long-term investing strategies. So his knowledge is widely sought out by investors, beginners, and veterans alike. But before we get to discuss his ideas and opinions about the market, make sure that you are first subscribed to our channel, and don't forget to give us a thumbs up. So, let's start this video. Professor Siegel starts by explaining the premise of his book, which is that stocks are the best long-term investment available to investors. He provides a historical perspective, showing that stocks have consistently outperformed bonds and other assets over long periods. He started the discussion with a brief history of bonds and stocks. He said that as we look back to the 50s, 60s, 70s, and even the early 80s, the beta of bonds in stocks was positive. However, since the 90s, this trend has shifted dramatically. The beta of bonds in stocks has gone from positive to zero and then to negative. This means that a negative beta asset like bonds will have a lower rate of return. Even though stocks are considered to be a higher risk investment, they now have a higher rate of return compared to bonds. During the past year, we have seen a shift in this trend. Treasuries, which are negative beta assets, have correlated with stocks. In the past, during all the crises, the financial crisis and the COVID-19 pandemic, treasuries were up when stocks went down. Treasuries are an asset that is in high demand during times of crisis, which is why their value goes up during a shock to demand. The 6th edition of Professor Siegel's work, which has been revised to reflect the most recent financial trends, is then discussed. He offers his opinions on the state of the market, particularly how the COVID-19 pandemic has affected the economy and stock market. According to Professor Siegel, the stock market is currently experiencing a time of uncertainty. There are still a lot of unknowns that could soon have an impact on the market, even though the economy has been recovering from the COVID-19 pandemic. The long-term outlook for stocks is still favorable, according to Professor Siegel, and investors who stick with it will eventually be rewarded. Aside from the pandemic, Professor Siegel also mentioned other factors that may impact the market. One factor that could impact the market shortly is inflation. Professor Siegel explains that while some inflation is normal, high levels of inflation could lead to a more challenging investment environment. He advises investors to be cautious and to consider investing in assets that are more resistant to inflation. Another factor that Professor Siegel believes will impact the stock market is the rise of ESG investing. He explains that as more investors focus on environmental, social, and governance issues, companies that prioritize these values are likely to outperform those that don't. He encourages investors to consider ESG factors when evaluating potential investments. Finally, Professor Siegel discusses the role of technology in the future of the stock market. He believes that technology companies will continue to be a driving force in the economy, and that investors who can identify the right opportunities in this space will see significant returns over time. In this video, Professor Siegel notices how technology has improved business efficiency and created fresh growth prospects. He uses Amazon as an illustration, noting how it has upended conventional retail paradigms and produced new, previously inconceivable business models. In addition, Professor Siegel thinks that technological developments like the development of artificial intelligence and the Internet of Things will continue to open up new opportunities for businesses and investors. He exhorts investors to monitor new technological developments and hunt for businesses that are well positioned to benefit from these trends. However, Professor Siegel also cautions investors against becoming too focused on individual technologies or companies. He emphasizes the need for diversification and recommends investing in a range of different stocks and assets to minimize risk and maximize returns. As we navigate these uncertain times, it is important to consider the changing dynamics of the stock market and the role that bonds and other assets can play in a well-diversified investment portfolio. By keeping a long-term perspective and staying informed about market conditions, we can make informed decisions about our investments and build a secure financial future. Professor Siegel then goes on to share his advice for investors based on his years of experience in the field. He stresses the importance of diversification and explains how investors can minimize their risk by investing in a range of different stocks and assets. He believes that diversification is essential to invest in a range of different stocks and assets to minimize risk and maximize returns. He also advises against putting all of your money into one stock or asset, as this can be very risky and potentially disastrous. Also, he advises investors to focus on long-term trends and to avoid getting caught up in short-term market fluctuations. He also recommends doing your research and carefully evaluating each investment opportunity before making a decision. Another tip from Professor Siegel is to avoid getting too emotional about your investments. He explains that fear and greed can lead investors to make irrational decisions and that it is important to remain objective and focused on the long-term goals of your investment portfolio. He also explains that building a successful investment portfolio takes time and that it is important to stay committed to your strategy even in the face of market volatility. In that discussion, he also explained how to evaluate stocks and how to avoid common mistakes. He emphasizes the need to focus on long-term trends and avoid getting caught up in short-term market fluctuations. In conclusion, Professor Siegel's observations on the past performance of stocks and bonds, as well as his assessment of the current state of the market, offer insightful advice for investors trying to create a profitable portfolio. Professor Siegel recommends investors concentrate on diversification, research, and adopt a long-term perspective while remaining enthusiastic about the long-term potential of stocks, despite the COVID-19 outbreak and other variables that may cause uncertainty in the long run. Investors can negotiate the shifting dynamics of the stock market and create a stable financial future by paying attention to his guidance and avoiding frequent blunders. Keep in mind that stock investing can be a terrific method to accumulate wealth over time, but it's crucial to do your research and make wise choices. Thank you for watching, and we hope you found this video informative and engaging. If you did, make sure to give us a thumbs up. See you in our next videos.